Tesla stock. Tesla stock is the subject of today's video. Two videos to react to here in this one. It's a buy one, get one free here today. Should you buy or avoid Tesla in 2023? The fast money traders debate. This shall be interesting. We know usually most of those fast money people are bearish on Tesla, so we shall see if they have flipped sides here, okay? Next video I want to react to, this one's actually just from 7 hours ago. Tesla shares are undervalued. Gene Munster is going to take us through kind of what he's projecting here in regards to Tesla and hear about that. So I hope you guys enjoy this as always. Thank you everybody that subscribed to the channel. 21,100 plus subscribers on the channel, so I appreciate every single person that subscribed to the channel. Also, thank you for everybody that's supporting the Patreon. We just launched it yesterday, and I appreciate everybody that's supporting on the Patreon. If you haven't heard, essentially, I created an account through Patreon. You guys are going to be able to keep up with all the buys and sells that I do in that specific account. And we'll see how we build that over time, only with $150 deposited each week. And should be quite fun. Now, I have gotten some questions and I wanted to clarify this. Things like this. Hey, Jeremy, I enjoy your content on YouTube. Are you going to be doing any additional videos for Patreon members? Things like that. No, I'm not planning on doing anything like that. Just literally all it is, if you want to support the channel, you enjoy the content, and you want access to be able to see the stocks I'm buying and selling in that portfolio, that's the only reason to join in there. There's no additional videos, nothing like that. So don't be expecting anything like that. But I've definitely gotten a lot of questions about that. Can you provide buy ranges for these stocks? No, I don't do any of that. It's not even stock recommendations. It's just showing you literally the stocks I'm buying and those sorts of things. So I just think that's important to keep up to date with in regards to that. And once again, if you're looking to join us in there, that will be pinned comment. I appreciate everybody that supports the channel as always. And let's get into this.
Under our belts in 2023, we thought this would be a good time to reveal our trading acronyms for the new year. The names our traders are spelling out that could be worth a look. Tonight, we're bringing you Dan and Steve's contradictory thoughts on Tesla. Steve's going to wait a second as Dan makes the big reveal. Dan, your acronym, please.
Yeah, mine is TSLQ.
Whoa, TSL, what? This man's going bullish on Tesla, one of the most negative people I've ever seen on Tesla over the years. Him and Tim Seymour, the other fast money guy, they've been so bearish on Tesla over the years. And obviously, Tesla's done amazing, but this should be interesting.
Some of you guys might understand what that is. That's the inverse ETF of the Tesla. But here's what I want to do with this one. TLT, my whole thing. Remember Qs and 2s? I want to do QQQ and I want to do 2s. But in this case, the 20s. So the TLT is the iShares 20-year Treasury ETF. And at some point, I think this year, it's going to be a great buy, as I think rates have kind of topped out here. The other one is Snap. And, to me, this is, I think, a cheap social asset on an adjusted basis. They're making a little bit of money. Same thing there for Lyft. I just think you're going to see some strategic M&A for some relatively cheap names.
I don't know if Snap's really making a little bit of money or if they're losing a lot of money. We'll see.
Like that. And the last one is the QQQ. Going back to that, I just think that, again, those top 5 names make up about 40% of the weight of the QQQ. I am in the camp that some of those...
As far as Lyft stock, not a bad stock, but I would definitely much rather be in Uber stock than Lyft if I was forced to buy one.
Prior leaders of the last bull cycle are the ones that are going to lead us out. So I want to own, I want to own.
With Uber, I get access to obviously the ride sharing service, which is much bigger than Lyft. I get access to Uber Eats, right? And I get access to Uber Freight. So, I feel like Uber's a much better long-term investment than something like Lyft. That's just my opinion.
On yields going lower, I want to own the QQQ. I think the yields going lower helps that. And I think some of those strategic M&A names are really interesting. And then lastly, the TSLQ. You see what I did there? It's kind of like it embedded into the thing. I think last year is the year that the bloom is off the rose as far as Elon Musk and all that. I think this is the year that fundamentals make Tesla go even lower than where it is right now, because I just think all of the pillars of the bear case are really going to play themselves out in 2023. So I think TSLQ.
So TSLQ fits in there because you already used TSL and Q.
Yeah.
So you're also saying the entire.
See what I did there?
So you squeezed one in extra.
Yeah, that's what I did.
Nice.
It's not really playing by the rules.
Yeah, but I don't play by the rules.
Okay. Overall, though, this seems like sort of a risk-on sort of trade. You said at some point, so you mean like this is an acronym that perks up in the back half?
I don't know anybody who just buys a bunch of names in the first week of January and just sticks with them the whole time. So this is kind of my target list. How's that, people? You'll hear it.
That's because you only know Wall Streeters, and Wall Streeters are a bunch of gamblers. I mean, excuse me, they're a bunch of traders, right? They're in and out of these stocks, and next thing you know, they're in, they're out, they're selling the market, they're all of a sudden short everything, they're on the sidelines. I mean, they're constantly moving money around and collecting all their management fees and those sorts of things, but that's not long-term investors, right? A long-term investor looks at the company, let's say it's Snap, and let's say that's a stock somebody wants to buy, right? And they're looking at that from the next 3, 5, 7 year perspective. If they get any major dips in the stock, they're looking to buy that, more shares for obviously cheaper prices. They're keeping up to date with everything going on with the company. They know it inside and out. And I think that's what's missed a lot of times by a lot of these Wall Street folks that are very short-term in nature. They don't understand the investor psychology that goes into this many times, and they don't understand how well people know these stocks inside and out. And a lot of the Tesla longs, for instance, can listen to some of these Wall Streeters, speak about the stock, and just like, if you know the company so well, right, you can just tell like how uneducated maybe some folks are in regards to a stock like Tesla. Like if you know that company inside and out, some of these Wall Streeters are talking about it, and they're talking about these like points that it's like, what this is like a mute point, like this is ridiculous, right? And anyways, it's just a different philosophy than obviously I have, and most of you guys that obviously watch my channel have in regards to that.
First on Fast Money.
Okay. Steve Grasso, you're on the other side on Tesla. So what's your acronym?
Ooh, so let's see why he's bullish on Tesla.
Acronym is just, we'll just rip through them. I'll get to the Tesla at the end. JP Morgan, for all the reasons I stated for the last couple of shows. I think they're the most set up financial. I know they've outperformed, but as Dan just said, we had a lot of green for the year, so I think that JP Morgan's outperformance maybe comes in a little bit, but I'm okay being there. If you look back to the financial crisis, they've outperformed every other bank on pretty much every other metric.
Yeah, and JP Morgan is a stock I personally own in my dividends only account. Just a little decent sized position in my dividends only account. And I like JP Morgan. I don't love this stock. It's not certainly one of my favorite investments, but good, solid, well-run bank who's amazing, and they'll do well for themselves regardless of the economy. Their earnings could get hit if the economy gets far worse, right? But regardless, they're one of those companies that should be able to stay profitable on a yearly basis, even in a pretty bad scenario, essentially.
And then I jumped to, so that's my safer bet. Then United Health, which got demolished. I would have liked the year to start on January 6th, where UNH actually seems to have bottomed. I think this one will do you well if the market decides to come in just a bit. So this is more of my safety trade in the space, or in my acronym, I should say. So the J and the U are my more value investing choices. Then I jump to
United Health is trading very rich. We looked at that on the main channel probably, that was probably a week ago, 2 weeks ago. And United Health is just trading at much higher valuation metrics, things like PE ratios, forward Ps, than it traditionally has. So that's one of those stocks that could come down regardless of their numbers, just based upon the fact that it's, to be quite frank, overvalued.
SPACs have been demolished. And I think that that's the reason why STEM Inc. has been hit so hard, because it was a SPAC. Now it's lifting its head. A couple of price target raises on the street. And those price target raises are important because they actually factor in a doubling of the stock at least. So STEM, for most people who don't know the name, this is a artificial intelligence energy company. They regulate whether you hit battery on site or if you're going to the grid, and they do it automatically. They switch back and forth. It's very environmentally friendly. It lowers carbon emissions. I think this is where the puck is going. I think this stock has a very, very bright future ahead of it. And then we go to Tesla. So
Tesla. Okay, finally we're to good old Tesla here. It'll be interesting to see if he's as out there in regards to Tesla as many other stocks, because of this show being overall net very negative on Tesla over the years.
All Dan's reasons, I don't really disagree with him. This fits into that it's so bad, it's good for me category, and I think it's been so beaten up in 2022. I think it comes time for Elon Musk to talk more about batteries than cars, more about batteries than Twitter. I think this one can bounce aggressively. I'm long it. I'm going to stay long.
I feel like we should vote on these.
Interesting. So in my opinion, in terms of Tesla, do I think the stock's in a bottoming out process? I think it is in a bottoming out process, but it's likely going to be a 3 to 6 month process. So you're going to get some really nice rallies. You'll get some massive kind of dips and maybe even some lower lows to come in here and there and things like that. But, be one day you'll think the coast is clear and up and away we go. And next day it's a massive downward move. So I think we're going to have a bottoming out process. It's going to last 3 to 6 months. And we're only about, we're a little less than a month into this essentially. And that's a very similar phenomenon to what happened with Netflix stock, what happened with Meta stock, and many of these other various stocks that got absolutely hammered. Many of them took a bottoming out process that lasted anywhere from 3 to 6 months is what I found for many of these stocks.
Something, don't you? I feel like there should be a viewer poll or something. We'll reevaluate when we get through all the acronyms and we'll see what we do with these.
Okay, so that covered that one. All right, next one up here. Gene Munster. What's he got to say about Tesla? He says the shares are undervalued. Let's hear what he has to say and then what he's projecting.
Talk about the outlook for Twitter or for Tesla and tech stocks is Gene Munster, managing partner at Loop. And Gene, we saw this stock under some significant pressure. We've seen it come back a little bit. How are you feeling about things as we kick off the new year?
Becky, I am a long-term believer in Tesla. I think that the shares are undervalued. Near term, I would be cautious. I think that there's going to be some earnings pressure on this based on some of the discounting that has happened. And there is this bias when a stock is down as much as Tesla just to want to own it. I sense that too. We want to own it in our funds. We don't own it yet because we want to optimize that opportunity. And so
I wonder if Tesla is the stock I bought in the Patreon account this past week, along with a few others. And I wonder if I'm going to buy it this upcoming week.
The key here, of course, is we know the delivery numbers. We know the growth numbers. Up 31%. That was about a 2x what the overall industry growth rate was. Typically, Tesla grows at about 3 to 4x the industry. So some of that gap, that revenue growth gap has closed. The delivery gap has closed. But again, I want to anchor back into what I think is going to be the A topic when they report on January 25th, which is going to be earnings. And just a quick math here, of course, they are discounting in China. They lowered prices by 13%. If you assume there is no other discounting across the globe when it comes to Tesla pricing, that would have a negative 15% impact on the March earnings. The street's looking for about $1.40 right now. If you start to factor in that there may be...
We also have to... Okay, this is very important. I say this right now, okay? We have to factor in, because everybody just looks at discounting and like assuming like margins are going to be bad, profitability is going to be bad. But the one thing people are not factoring in is that Tesla finds ways to save money on many various things over time, okay? That doesn't mean absolutely, let's say they drop prices 13%, doesn't mean magically they found 13% cost savings, but there's a decent probability, and I've been an investor in this company for many years, I found they just get better and better when it comes to their margins and their profitability and figuring out ways to save money. And like cost savings initiatives that don't really get talked about too much, but they secretly kind of do on the DL. And they've got one of the best engineer teams out there. These are some of the smartest individuals on the planet that are working for any company. And they find these ways to all of a sudden save costs out of nowhere. And it's like, wow, we just brought down, basically what it takes to make a Tesla just became much less, right? And so I'm not counting on necessarily them, if they drop price 13%, they have a 13% cost savings. But I do think it's important that there's likely some sort of cost savings this company has found over the last 3 to 6 months in China. And that's part of the reason why they're able to do that, essentially.
Some further discounting, that number goes down. So I think that investors should
look at that market share difference. I mean, my gosh. I mean, if Tesla was to come down to 40%, 40%, 50% market share, very similar to the market share that roughly Apple has in the United States, which is what I've always, if you have paid attention to me in regards to Tesla over the years, I've always thought Tesla could have a market share very similar to Apple, that 40 to 50% in developed markets like the United States, Europe, and things like that, right? And so think about this for a moment. If oh, we're going to 100% EVs over the next, let's say 10 years, 7 years, 10 years, whatever you want to project out, right? I mean, if Tesla has 40 to 50% market share, like do the math on that and how many vehicles are selling per year and the margins on that. And I mean, it's incredible, incredible numbers. Never mind if they can have a 10 or 20% market share in China over time. You don't even need 20%, just 10%. My gosh, the numbers are massive.
Generally expect about a 25% haircut to the March earnings. And that does not sound very optimistic from someone who's been bullish on Tesla for a long time. But I do want to underscore, I remain positive on this company. I think ultimately there are a few good reasons to own this in 2023, but I think that we can see some more pressure in the near term.
Gene, when did you sell Tesla shares?
Yeah, so my perspective on good old Tesla in 2023, I think it's going to be tough sledding. From the stock price perspective and from the company perspective, I'm not expecting any special numbers. They're going to ramp Cybertruck at some point in the back half of 2023. That's going to likely hurt profitability as they ramp that. We know just Tesla, usually whenever they're starting to ramp a vehicle, we know there's problems that arise, right? And there's costs that go along with that. And so that could hurt Tesla's profitability in the back half of each year, right? But I think 2024 is going to end up likely being a pretty good year for the company, a much better year than 2023. This year they have poor consumer sentiment they're working against, right? They're having to comp ridiculous comps year over year. Plus they're having to deal with a Cybertruck ramp, right? But without the significant revenue coming in from Cybertruck, right? 2024, you're going to have crazy revenue coming in from Cybertruck. Plus, I think there's a high probability the Fed will have lowered interest rates substantially by that time. They could even potentially do it in the middle or the back half of 2023. And I think it'll be a much better environment for selling anything high priced, whether that means homes, cars, and things like that in 2024 than it was in 2023. I think this is kind of the trough year, in my personal opinion, in regards to all the higher end expenditures, homes, cars, furniture, anything like that.
Them in your fund at one point.
We did. They basically tapped out on a market cap. It kind of blew through a market cap provision. So it was a long time ago, but we had owned it a lot lower. But as it went up, we had to sell based on some market cap. I think we had a maximum market cap in that fund of like 400 billion. So when it blew through that, we had a forced sell on it.
Of 400 billion?
Yeah, I mean, Tesla at the top was at 1.2 trillion. So, man, they missed out on some incredible opportunity there.
Yes.
That's the toughest thing about some of these funds. They put themselves in these situations where they have forced selling. You know, it goes to this price or that price or this market cap, that market cap. And next thing you know, they're forced to sell. And it's just, and then you miss these opportunities, right? Crazy.
What did it go to? You didn't get, you didn't.
Yeah,
we
missed a lot of the juice. We did, what? Joe. Yeah, we missed a lot of it. I think one of the challenges that with some of these funds is that these small and mid cap funds they hold these companies until they're very big, and I think they lose some of their direction. And so
you want to let your profits run and cut your losses, not cut your profits and let your losses run, right?
Well, in this case, we had some rules around the size of companies for being a small and mid cap company. And when it blows through some of those targets, just to maintain that.
Hey, Gene, keep going. Sorry.
No, I was just going to say, yeah, we just want to keep our products in line with our market cap provisions. So.
Yeah, that's fair. I would love to hear the next piece of that and kind of what he had to say in regards to that there. But, for all Tesla investors, I think it's just very important to stay focused on the long term this year. Understand it's going to be a grind of a year for Tesla to put up impressive numbers, right? And just understand that likely whatever Tesla's putting up for numbers, it's going to be far, far exceeding the market in general, right? And if Tesla has any troubling numbers throughout 2023, just imagine how troubling it will be for the traditional auto manufacturers, right? It's a very tough environment for selling expensive anything. Homes, cars, furniture, all that stuff. It's going to be very much a grind year for anything like that. I mean, just business in general, but especially those high dollar things, especially anything that people take out a loan for, debt for, which is obviously cars, fit right into that criteria. So hope you guys enjoyed today's video. As always, I appreciate each and every one of you. Thanks for being subscribed. 21,100 plus subscribers now on this channel. I appreciate y'all. And if you want to support the channel and join us on on Patreon and get access to my buys and sells in the new Patreon portfolio, check out the pinned comment down there. Join us in there. I appreciate everybody. Much love as always, and have a great day.